Good evening and welcome to Capital Market. I am BC Adebayo. We kick off from the global scene as global equities were mixed as markets struggled to gain traction against the backdrop of rising coronavirus cases in the U.S. And European markets also closed lower on Friday amid concerns over surging coronavirus cases in the U.S. and the pan-European stock 600 closed 0.4% lower, with most sectors and major bourses in negative territory. Of course, the markets had advanced as much as 1.1% earlier in the session, but those early gains were wiped out amid an increase in the number of coronavirus infections in the U.S., with Texas pausing the reopening of its economy after another record daily rise in new cases and hospitalizations. Well, the IMF had on Thursday warned that stocks could suffer a second meltdown in the event of another global spike in infections and the reintroduction of lockdown measures or an escalation in trade tensions. And it has been a big week for corporate news in Europe. Of course, Wirecard filed for insolvency on Thursday, unable to account for a $2.1 billion black hole in its balance sheet and owing $4 billion to creditors. Shares of the German payment company tumbled another 64% on Friday to trade at just 1.28 euros per share. Lufthansa shareholders on Thursday also backed a $10 billion German government bailout package to rescue the embattled carrier after major shareholder Heinz Hermann dropped his opposition to the plan. The airline group's stock price slumped over 6%. Meanwhile, the Dutch government has agreed a €3.4 billion rescue deal with France for Air France-KLM as airlines continue to reel from the months of worldwide travel restrictions, of course, caused by COVID-19, and shares of the company fell slightly following the news. And British engineering company Wire Group was the biggest gainer by Friday afternoon trade. Of course, it climbed 5% after the announcement of the refinancing of a $950 million revolving credit facility and a £200 million term loan. And talking about the U.S. now, stocks fell sharply on Friday after Texas rolled some of its reopening measures, raising concerns about the latest spike in coronavirus cases and its impact on the economy. The Dow Jones Industrial Average closed 730.05 points lower at 25,015.55. The S&P 500 slid 2.4% to 3,009.05, and the Nasdaq Composite dropped 2.6% to close at 9,757.22. And those losses led to the major average's second weekly drop in 3 weeks. The Dow and the S&P 500 fell 3.3% and 2.9% respectively for the week, and the Nasdaq lost 1.9% in that time. Texas ordered all bars and establishments that receive more than 51% of their gross receipts from alcoholic beverages to shut down operations. Restaurants and meanwhile limits on-premise dining to less than 50% indoor capacity. Florida also announced it would suspend on-the-premises consumption of alcohol at bars in the state after reporting a surge of nearly 9,000 new virus cases. In Arizona, the number of cases jumped by 5.4%. Of course, that topped the 7-day average of 2.9%. And at a nationwide level, the daily average number of confirmed coronavirus cases is now more than 33,000. And in Asia, most of the stocks rose on Friday, of course, as the coronavirus situation stateside continued to be monitored by investors. In Japan, the Nikkei 225 rose 1.13%, closing at 22,512.08 as shares of conglomerate SoftBank Group jumped 3.04%, while the Topix index added 0.99%, finishing its trading day at 1,577.37. South Korea's Kospi also gained 1.05% to close at 2,134.65. In Hong Kong, the Hang Seng Index bucked the overall trend regionally as it slipped 0.77% as at its final hour of trading and had shares of tech giant Alibaba dropping nearly 3%. Meanwhile, shares in Australia also advanced, with the S&P ASX 200 up 1.49% at 5,904.1. And overall, the MSCI Asia ex-Japan Index rose 0.3%, and markets in China were closed on Friday for a holiday. And back home now, sentiment in the domestic bourse remained weak as investors took profits on large cap stocks. However, significant interest in Airtel Africa and Nestle in the last trading session of the week led the market to a marginal gain for the week. The all-share index advanced 0.01% week on week, settling at 24,829.02. And the month-to-date and year-to-date losses printed 1.7% and minus 7.5% respectively. Sectoral performance reflected the overall market sentiment as all sector indices declined. The oil and gas sector was down 4.8%, industrial goods lost 2%, insurance 1.6%, banking was down 0.5%, and consumer goods was marginal 0.01%. Meanwhile, the month of June is drawing to a close, and we will be getting into a new month next week. Well, let's see how the markets have performed so far. And I'm being joined by the Registrar, Chartered Institute of Stockbrokers, Mr. Adedeji Ajadi, who's right here with us in the studio. Good evening, Mr. Ajadi. Thanks for coming on the program.
Thank you very much. Always a pleasure to be here.
Now, let's begin with this conversation with you describing the sentiment that has played out in the markets this month of June.
Yes, I expected it because, of course, earlier in the year when the coronavirus issue started, there was the problem of oil prices as well. And so things went down, market prices went down the first quarter of the year. But things improved in April and May, because of renewed hope that we'll be able to solve the problem of the pandemic. And so sentiments improved. But when you look at the situation globally now, because of the release of the lockdown in most parts of the world, including Nigeria, we have started seeing spikes in the rates of infection all over the world now. The same back home in Nigeria. So, market thrives by sentiment and news and the prospect of what will likely happen in the future. So again, the uncertainty level rose again, and of course, people will start to react to that. I think that's what we have started seeing in the market. The capital market is a leading indicator. So it indicates what will likely happen in the future. So when you want to see what will likely happen in the economy, look at the capital market. It's a reflection of what the sentiment is about what the future will likely hold. I think that's what we have started seeing in the capital market recently.
But in spite of all these, of course, the period when the market was, upbeat, so to speak, what were the major drivers of the market at this time?
Couple of things, just like I mentioned, you'll notice that from April, May, there was lockdown, and then there was renewed hope, that vaccines for coronavirus was being developed. And so people started having this confidence that it appears that things will improve. The American economy, suddenly also the capital market started to improve. And then there was release of the lockdown, gradual easing. That gave people some confidence that we are about solving this problem. And so that reflected in the capital market. Oil prices as well started gaining traction, and that has continued. So with all of those, confidence started coming back into the market, and you saw that in the prices of equities during that period. But with the new situation happening now, of course, there will be a little bit of reversal of that. And let me also say that over time, there has been bargain hunting as well. Designing investors saw equities that had gone so low, took up the opportunity, the prices started to rise. Some people will also want to take the profit. So that volatility is one of the things we should expect at a time like this.
So now, of course, we've seen a lot of stock prices bottom out, just like you mentioned now. So do you think that this is actually a good time to venture into the market?
Absolutely, absolutely. The problem with that is that people are fearful. But that's the way the market works. Anybody who understands the market, history tells us the market goes into seasons of boom and bust. So where we are now is a fantastic opportunity for people to take position, but that means if you are confident enough to say, oh, I can stick my funds. So the problem is a lot of people are afraid now. They are not too sure what will happen. But really, when you analyze the market, look at the fundamentals of the stocks that we are talking about. Stocks that have very strong fundamentals, what is driving the drop in their prices is not about the company, it's simply about what is happening in the global economy or the macroeconomy. So when you see stocks like that, it's a good time to take position in them.
Now, let's talk globally now. Of course, the global equities markets have rallied despite troubling real-world events, of course, the coronavirus pandemic and all. And the IMF, in its financial stability report, is warning that there is a disconnect. Of course, the fund believes that the global stock market rally represents a gamble by investors. Now, how would you react to this?
Well, I think that's the way it is. This is still a period of uncertainty. We need to know that. You see, but market will continue to, as new information comes into the market reacts. If tomorrow now there are information that give us a little more confidence that we are about to solve the coronavirus problem, that automatically will reflect in the confidence people will have, and it will be reflected in. So we've been seeing all kinds of news, sometimes positive, some negative. That is what is driving the movement that we are seeing in global market. So the rally came when people started gaining more confidence, but again, something can deflate that confidence, especially when you now see a spike in the rate of infection all across the world, and then the fear that, look, people are opening the economy maybe a little bit too fast, and things will likely happen. So the market will reflect that. So the fears may be justified, but at the same time, it is a function of what is driving the confidence of investors in the market.
Okay, now, coronavirus, yes, has dealt a big blow to the markets, but is that the only reason? Has that been the only driver for the markets?
I think it's the major one. It's the single most fundamental one, because the coronavirus pandemic affects really every aspect of our lives. It affects our social lives, it affects businesses, it affects the economy, of course. It affects even the psychology. People are psychologically affected by what is going on. So I think it's the single most important driver. There are other small issues in different economies. Locally, you can have some other factors. But the major driver is this. Look at the impact it has had. It has practically almost grounded certain industries. Tourism, look at Nigeria, you have not been able to do hold parties. And companies that service those businesses, those functions, definitely are going to be hit by the situation in the market. So people are reacting to that. Investors are reacting to that. So I think it's the major driver of what is happening globally.
Okay, please hold on to your thoughts, Mr. Jadi. We'll continue this conversation in just a moment with Mr. Jadi. Please stay with us. Welcome back. I still have here in the studio with me the Registrar at Chartered Institute of Stockbrokers, Mr. Adedeji Ajadi. But before we continue the conversation with him, now here in Nigeria, one of the highlights of the month in the market was the hosting of a special webinar on the impact of COVID-19 on the global capital market and the resilience of securities exchanges in supporting economies, and it was themed Capital Markets in a Pandemic. Let's listen to what the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema, had to say.
We've done quite a bit in the ESG space. We started out focusing on the G, governance, really building awareness around governance and creating indices. As you know, we also came up with our corporate governance rating system, really to get corporates focused on that. So that was the first thing we did. Then we moved into the E, environment, right? So we worked with the Ministry of Environment and our Debt Management Office to create the first sovereign green bond on the continent. We've since seen the sovereign issue a second tranche, and they're now looking at the third tranche. And we've worked with other corporates to come up with corporate green bonds as well, including Access Bank that has listed both on the Luxembourg Luxembourg Exchange and the Nigerian Exchange. So we're seeing a number of issuers coming in to participate. If you look at the balance between supply and demand, there are quite a number of investors that are looking to invest in sustainability compliant type projects, but we're not seeing
so there's actually demand, Oscar, for these types of bonds and investments.
So we've seen domestic funding. If you look at the federal government green bond, for example, it was oversubscribed by more than 200%, right? So we are also looking to attract the niche international money as well. But more importantly, we're finding that we're not seeing enough projects that have those climate credentials that will allow them to be properly certified green. And so we're having to work with the entire supply chain to help in driving awareness. We recently held a webinar just last week talking about how to develop that market and what are the various components that you will need in order to create a successful market. Another point I should make before I hand it back over to you is size. We're finding that because these are still early days in our markets, the size of the issuances are not that big yet. So the most recent one was about 15 to 16 billion naira. Most international funds that are looking to invest in these types of projects are looking to invest $50 million and above. So we have to scale as time goes on to really attract the supply of funds, which we know is there.
Was the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema there. Of course, you heard him talk about efforts, that are being put in place to avoid the disruption in operations of the markets caused by the pandemic. And he also talked about the latest issuances coming into the market. So how would you react to some of the things that he talked about there?
Yeah, absolutely. He mentioned particularly the issue of environment, sustainability, governance. That's the direction the global community is going now. We are beginning to see the impact of the environment on everything we do, and the fact that we need to refocus on that. So not even just capital markets alone, companies on their own are having policies around ESG. So it is the right direction to move on to. And in Nigeria, we need to do a whole lot more of that concerning focusing and refocusing on our environment and how to ensure sustainability, for the future generations to come. So that's why we have started seeing things like green bonds, people investing, in a sustainable way for the future. We need to do a lot more of that in Nigeria. It has started, but actually we need to create more awareness. That is the direction we need to go.
Now, one other thing that the pandemic has done is to force all trading to be done remotely. How has that fared?
Excellently well, I think. I remember a couple of months ago when I was here, we were talking about when it just started, and we were talking about the issue of remote trading. And so you can see how it has been very successful. Talking to a couple of MDs of stockbroking firms, some of them even confirmed that they've done better during this period than when there was no pandemic in terms of the volume of activities, and people have been working remotely. So it's not even just the platforms. All the platforms have remote capabilities, and they've deployed that from the FMDQ to NSE to NASD. But even that, participating firms on their own have also rolled out plans for remote business, and it's going on excellently well. So most investors now are hooked on to the remote platform of the various stockbroking firms, and it's going on excellently well. So I think this is just a pointer to the possibilities that are available with technology, and people have embraced it very, very well.
And so you see this continuing post-COVID-19?
I think it would take center stage. You see a lot more people now, using technology to drive their businesses and investment.
Now, so as we go into a new week and a new month, of course, the pandemic is still very much with us. What would you think? What would be your outlook for the markets?
I think for the next couple of weeks and months, there will be a lot of volatility. So prices will go down at some point, will rally back again, until things begin to stabilize a little bit more. So my general advice to investors is that you need to be careful. You need to look at fundamentals of the companies you are buying. And this is an opportunity for people who want to take advantage of the market, to look at stocks that are valued very lowly at this point. And those stocks will rally. I don't know when. It may be 6 months, it may be 1 year. But I tell you, in the future, the stocks will rally. But we need to be careful. We need to know exactly what we want to do and seek advice if you need to before you put in your money.
And what opportunities are there for capital raising and listings? Of course, you talked about it, just now, but what opportunities?
This time it may be a little bit dicey. People are not too confident about the market. So it might not be the most appropriate time. The period of uncertainty is not the best for capital raising. But as things improve, as things stabilize, I believe people can take more advantage of that. But at this time, it's a little bit uncertain. And so I think any user needs to be wary and really look out carefully before taking on anything like that at this point in time.
All right, just before we round up this conversation, tell us, what are your stock picks going into the new month?
Well, a disclaimer, these are just my own views, but we have a lot of fantastic stocks that I think are valued quite lowly. A couple of them, GT Bank, for instance, I think that's a 35 Naira, 40 Naira stock. The same thing with Zenith, trading at 16 Naira, trading at 22 Naira. Those are fantastic stocks. A stock like Guinness, at 15 Naira, I don't think it has ever traded that low in its history. Now, these are strong stocks that potentially will rally, but the situation of the market is making them to be priced so lowly in the market. So these are opportunities that people can look into a whole lot more. Maybe they should pay for that.
We'll see about that. We would like to thank you, Mr. Dedeji Ajadi, Registrar, Chartered Institute of Stockbrokers. Thank you for coming on the program this evening.
Thank you very much.
And that's where we end today's program. Thank you for watching. I am BC Adebayo. See you next time.